It's a mixed close on Wall Street, with the Dow Jones closing flat and the S&P 500 and Nasdaq snapping three-day gaining streaks to lose up to 2%. Facebook parent Meta slumps as much as 18% in extended trade after earnings and guidance disappoint the street. It's a mixed start for stocks in the Asia Pacific as investors assess a raft of economic data and earnings. The Bank of Japan begins its two-day policy meet. The adjusted SGX Nifty rate, meanwhile, signals a big bump up at the start of the trading session. A weaker dollar and record U.S. exports see oil prices surge over 3% on Wednesday. Brent crude edges higher this morning, now trading above $96 a barrel. Staring at under-recoveries of more than 1 lakh crore rupees, oil marketing companies are likely to seek the government's intervention. Industry sources say they need a price hike of up to 15 rupees for a litre of diesel to contain under-recoveries. That's CNBC-TV18 exclusive. The CEO of Tata Steel, TV Narendran, says time is running out for its UK business, hopes the British government will take a call on funding soon, adds that breathing space is vanishing and it is time for other stakeholders to chip in. Hi guys, a very good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are all of the top headlines that we're tracking for you this morning. So clearly we have lots to get to after that midweek holiday, and we are getting pretty mixed kind of handover from Wall Street because a lot of the earnings disappointed. But what's positive is that Asia is looking well in the green. All of those markets are actually in the green. So the Hang Seng is leading those. It is up 2.8%. It's come off a little bit. It was up over 3%, but solid start for the Hong Kong market. Taiwan is up on your screen, 1.6% higher. Kospi is also doing well. It's around 1.5% in the green. And across the board, you're seeing all of the Asian markets in the green right now. Even something like a Nikkei in Straits, which was struggling in the early sort of minutes of opening, are now all in positive territory. The SGX Nifty will also come up for you, by the way. And take a look at it with the Nifty futures close that we got, and it is indicating a big bump up at the start of the trading session. Over 250 points is what we have on that one. So that's what's really going on with Asia. But let's talk about the U.S. markets now. Wall Street ended Wednesday's trading session mixed. So the Dow Jones ended flat. The S&P 500 closed with a 28-point cut, and the tech-heavy Nasdaq ended 2% lower. CNBC's Sarah Eisen is here with a wrap of all of that action from Wall Street.
Big earnings disappointments from two of the country's biggest tech companies were a drag on the wider market today. The tech sector as a whole was one of the biggest losers in the S&P. The Dow closed nearly flat for the day. The S&P 500 down nearly 0.75%, but the Nasdaq, which is dominated by tech names, fell the most, just over 2%. Shares of Google parent Alphabet lost over 9% after its profits and revenues both came in below expectations late Tuesday. Spending on ad revenue, especially for YouTube, came in below estimates. It was the company's worst day since the beginning of the pandemic back in March 2020. And Microsoft dropped over 7%. Its earnings came in above estimates, but the company's outlook for the future disappointed investors. The tech giant CEO said weak PC demand continues to hit Microsoft's consumer segment. That's the action from the U.S. market. Back to you in Mumbai.
All right, Sarah, thanks a lot for getting us all of that action from Wall Street. So clearly, it's a lot about the earnings that came through and the weaker guidance also, which is really disappointing the street. But let's also, on that note, bring you some important opinion. This comes in from Saira Malik, Chief Investment Officer at Nuveen, on the impact of rate hikes and the tech sector. So let's listen in to what she had to say.
We may get some euphoria when the Fed starts to moderate rate hikes. I don't think we'll see that next week. I'm expecting 75 basis points. If they go down to 25 basis point rate hikes in December, markets could be positive on that. I think what we're missing, though, is there could be a long tail of moderate rate hikes going forward. The Fed's been pretty clear. They want inflation to get down to their target. CPI is still near all-time highs. I think inflation is pretty sticky. Good news is I am seeing some real-time data of inflation moderating, but I don't think that really flows through to a 2% or even 3% CPI number for a long time. So the market dealing with continued rate hikes in 2023 could be the story that keeps a lid on the S&P 500. Technology is going to be challenged in a long-duration environment when interest rates are going up. So that's going to be the issue. If you look at mega cap stocks, until recently, most of them, except for Meta, had been outperforming the NASDAQ. So they're not exactly cheap. Apple versus Amazon, challenging, but I'll take Amazon over Apple. Amazon has already been investing heavily. I think over the long term, we will get returns from their logistical investments. Apple is still going through that normalization period post-COVID where they had superior volume growth, and that's going to have to normalize to the low to mid single digit level. That could be painful for investors as we go through that. But all of these mega cap stocks, especially the ones that have an advertising business, are going to be challenged as there's a cyclical downturn, especially if they continue to keep investing heavily in their businesses.
All right, that is some interesting opinion coming in. But with that, let's move on to the final update on our global market wrap this morning. European markets ended Wednesday's trading session higher. So the French CAC index was up around 25 points. The German DAX index, also on your screen, saw a gain of around 140 points. And the British FTSE closed with gains of over 40 points. Now, it was really the strong earnings which came through from the likes of Standard Chartered, Barclays, as well as Deutsche Bank, which really drove the market higher. And investors should focus and will be looking at today's European Central Bank meeting. That is important to watch, where the ECB is widely expected to raise rates by 75 basis points. That is the consensus estimate. Markets will also be tracking the ECB's commentary on the path towards quantitative tightening as the EU heads for a likely recession. So that's what we're tracking in terms of the European market action, and we will keep bringing you updates on that through the day as well. But that's really everything that's going on globally. Let's talk about how all of these cues impact our own markets and the entire list of cues and stocks that you should keep on your radar today. We have Nigel, Sonal, as well as Vahishta joining us now to take us through the trade setup. Guys, a very good morning to all of you. And Sonal, let me come across to you first. We were just going through everything that's going on globally. Take us through what we should watch for our own markets.
Well, a lot actually. Good morning, Pavitra. Well, mixed global cues, so to say. US markets largely lower. It was Dow, but it was absolutely flat with some positive bias. We got weak numbers coming in from Meta, Microsoft, and Apple. So tech-heavy index, that definitely is in focus. More tech earnings are expected this week as well. US dollar index has slumped to 109.5. That is below the 110 mark. US 10-year yield has softened to near 4% versus 4.2 levels that we saw last week. And the Q3 GDP data for the US markets is expected today. The other thing is jobless claims, the initial jobless claims, they are expected today as well. So big numbers in terms of the market moves is what we'll be watching out for. In terms of what is happening in Asia, largely positive cues. We have Hang Seng, which is sitting with gains of around 2%, Taiwanese index up around 1.4%. So it is looking good as far as Asian markets are concerned. However, there was some GDP data that came in for South Korea, where the third quarter GDP is the slowest in 2021 at 0.3%. Oil prices overnight, they were higher by 3% above the $96 per barrel mark, led by record US exports. So a couple of things that we need to keep an eye out for as well. As far as our own markets are concerned, on Tuesday we snapped the 7-day winning streak, but today it is the monthly F&O expiry, so there could be some volatility in trade today. Nifty is up 900 points in this series so far, so let's see how it closes this particular one. So the support for Nifty now stands at 17,560. The resistance on the upside is at 17,800. But if we look at the SGX Nifty and compare it with Nifty futures, because yesterday we were not trading, it is indicating an uptick of more than 250 points. So it looks like it could be a day in the green for us. But from there, we'll see which way things go, because it could be volatile because of monthly expiry.
All right, so let's brace ourselves for a volatile session after we do get that positive start. Sonal, thanks a lot for that. But let's now move on to Vahishta, who has the entire list of stocks that we should watch out for in today's trading session. Hi, Vahishta.
Hi, Pavitra. Good morning. The first stock is, of course, Dabur. The revenues were up 6% year-on-year. However, the gross margins as well as EBITDA margins have been lower on a year-on-year basis. However, the new development for the company is that the company has entered into the branded spices category. This is by acquiring a 51% stake in Badshah Masala for approximately 590 crores. Moving on to Gland Pharma. Again, the results were announced. The revenues were better than estimates, but the margins and profits have been a miss. However, the company is still reported a quarter-on-quarter recovery, which is positive for the stock. There was a 3% growth in the core markets, which includes a 5% growth in the US market. The Indian business, though, has not performed well, with a degrowth of 42% year-on-year. Crompton Greaves Consumer Electricals has reported the Q2 numbers. The numbers have been lower than the CNBC-TV18 poll. The revenues came in at 1,700 crores, while the margins have declined to 11.4% versus 15.5% on a year-on-year basis. Though there's a new development which is coming up in Zee. Sony and Zee have voluntarily agreed to sell 3 Hindi channels, which includes Big Magic, Zee Action and Zee Classic. And this is to address the anti-competition concerns which were arising out of their merger deal. Now, at present, these channels make just about a minuscule contribution to Zee's revenues. So, on the face of it, looks like Zee and Sony have got the CCI merger nod, without having to lose much. Something on the pharma stocks, Lupin has 17 observations which were issued to Lupin's biotech plant, and for Glenmark, the Buddy facility was under the import alert.
Right, Vahishta, thanks a lot for taking us through that entire list of stocks. We're going to keep all of these on our radar. Finally, it's over to Nigel, who's looking at all of the cues from the F&O space. Nigel, expiry day.
Well, that's right. It's expiry day. And, one thing that's been standing out has been the institutional buy number. The FI and DI number, you look at it together. And last 7 trading sessions out, it's been close to around 800 or 900 crores, which is positive. Next up, we look at the FI data and the F&O market. Well, they unwound some longs as well as shorts. And now the short positioning is at around 66%. So they continue to remain net short, though the short positioning has come down from around 85% to around 66%. A bit of a worry is now they're writing calls. So the puts that were written, they were unbound. Well, they wrote close to 25,000 call contracts. And on the buying side, well, they bought some calls in, in the session before we got into trade. Couple of strikes that were active. 17,800 calls, 17,700 call. Between them, close to around 40 lakh shares were added. And if you look at the highs of the day, it appears the 17,800 odd mark is a bit of a barrier because we've gone there the last couple of sessions and we've seen some selling out there. So the SGX Nifty is indicating that we're going to be starting off bang in line with where the resistance zone is, at around that 17,800 to around 17,850 odd. So maybe some profit taking is what we could be met with. But the uptrend continues till the 50 DMA is held out. The Nifty bank took a bit of a break, in Tuesday's trading session. So we'll have to keep an eye out whether or not it can get back to those record highs, which should be good news for the Nifty. That's going to play a vital role. SGX Nifty suggesting a start closer to around that 17,850 if you adjust it. Back to you.
All right, Nigel, thanks a lot for getting us all of those few cues that we should watch out for from the F&O space. Let's actually thank our entire research team, Nigel, Vahishta, Sonal. Thanks for taking us through the trade setup this morning. But with that, it is time for a short break on the show. When we come back, we'll bring you exclusive conversations with Tata Steel MD and CEO TV Narendran. He says the time is running out for its UK business, so excerpts from that chat when we're back. Hey guys, welcome back. You're still tuned into Power Breakfast. Here's an important story that we're tracking. Industry sources are telling us that oil marketing companies are grappling with huge under-recoveries of over 1 lakh crore rupees by selling fuel and LPG at current rates. So the industry is likely to approach the government now, seeking an intervention. Sapna Das is standing by with all of the details that she's picking up. Sapna.
The balance sheet of oil marketing companies is under tremendous pressure because of soaring international prices and a price freeze in the domestic market. According to industry estimates, the backlog of under-recoveries on fuel and LPG is pegged at a massive 1 lakh crore. Hit by these mounting under-recoveries, government-owned fuel retailers like IOC, BPCL, HPCL may very soon be knocking on the government's doors for an intervention yet again. The government, of course, just this month agreed to give 22,000 crores to the OMCs on LPG under-recoveries. This direct fiscal support for OMCs for LPG losses was possible since the LPG price is regulated. But it makes good only a part of the problem. To come out of this dire situation, industry is now estimating a 10 to 15 rupees price increase, particularly on diesel. The other option is the government lowers the excise duty, but only for oil marketers. The duty cut is not passed on to the consumers by way of lower prices. However, the realization for the OMCs goes up through this method. Even the option of a calibrated increase in fuel prices may be considered only from next year onwards. High inflation and state elections in the current calendar will work against any talk of a price hike at this stage. All in all, there are too few options to bring the balance sheets of OMCs back to life. Direct fiscal support to the OMCs on fuel under recoveries is not possible as petrol diesel prices are deregulated, so to speak. But eventually, the government will have to take a call on either a price increase or lowering excise or maybe even a combination of both.
All right, Sapna, thanks a lot for getting us all of the details on this important story. But with that, let's move on and talk about the auto space now. The festive season has been quite a mixed bag for this sector. So while passenger cars have reported a solid almost 40% kind of growth over last year, it is the entry-level vehicles which continue to struggle even now. So Parikshit is standing by with a roundup of what the festive season has looked like for the auto sector.
That's right. Overall, the auto sector is expected to post a minimum growth of 40% year-on-year during this festive period, which began on the 26th of September with Navratri and went all the way up to Diwali and Bhai Dooj. The passenger car sales were the real driver of growth for the automotive sector. 400,000 cars were delivered during the last 1 month. This is what sources tell us. Maruti Suzuki, according to industry sources, saw a 45% year-on-year increase in festive sales at 190,000 units. For Maruti, the biggest sellers were Alto, Wagoner, Baleno during this period, and the company has an order book of 440,000 units as of now. Very strong demand for the SUV segment, led by the XUV 700, the Scorpio N, the Creta, the Harrier, the Safari, the Seltos, the Carens, and the Vitara as well. In the luxury segment, Mercedes-Benz saw a 15% year-on-year growth during the festive period. They delivered 800 cars on Diwali, 600 on Dhanteras. They also feel that the demand momentum will continue in the coming months because they received 1,000 bookings in the festive period alone. When it comes to two-wheelers, it's really a mixed bag. While the retailers expect a double-digit growth in two-wheeler festive sales overall, the sale of entry-level commuter bikes and entry-level scooters continues to be under stress.
All right, Pariksha, thanks a lot for taking us through that entire report card. But with that, let's move on and bring you some important comments from the CEO of Tata Steel, TV Narendran. He says the time is running out for the company's UK business. Speaking exclusively to CNBC-TV18, he said that the breathing space is vanishing and he hopes the UK government will take a decision on funding soon. So let's listen into that conversation.
Most steel companies to their governments across Europe is at least 50% of the capex that needs to be spent needs to be supported by the government. On top of that, there needs to be support on OPEX to the extent of the differential in energy costs when you move from the current energy sources to new energy sources. I think these are the fundamental principles, not just for Tata Steel, but pretty much all steel companies in Europe have been talking to their governments about. And so that's as much as I can say now without getting into the specific. Each of our businesses need to stand on its own. We have supported the business for a long time. We have invested a lot of money over the years in trying to keep the business going. But I think now it's time for other stakeholders also to chip in. The time available is depleting by the day because we had a year when the steel prices were good, the spreads were good, the business could stand on its own. That gave us some breathing space. But that breathing space is rapidly vanishing because of the high energy costs in Europe and the macroeconomic conditions in Europe and UK, right? So we don't have much time, So we need to get to this decision sooner than later, and I think that's been a submission to the earlier governments, and there'll be a submission to the new government. What are the options that we will pursue or discuss when we reach there?
All right, that is the word coming in from TV Narendran on the company's UK business. But it's time for a break on that note. When we come back, we're tracking all of the action from... Hey guys, welcome back. You're still tuned into Power Breakfast. And as promised, let's talk about the commodity space now. Manisha Gupta is joining us with that update. Manisha, what are you looking at this morning?
Morning, Pavitra. I'm looking at the crude oil prices, which have surged to nearly $96 a barrel. The weak US dollar now trading at a one-month lows, and the dollar index, by the way, is 5% off its 20-year highs that it hit in September. Clearly seems to be supporting many of these commodities. For crude, it is also about the record U.S. crude exports. Markets believing that the Chinese demand will start picking up once we enter month of November. The fall in treasury yields also seems to be supporting the prices. So it's not just the crude oil prices which have gained up by nearly 4% this week. You have copper, which is up 4% this week, trading at a 6-week highs. You have gold prices trading at a 2-week highs. Silver is surged above $19.5 per ounce as well. So most of the commodities starting Asia on a stronger note, as markets do believe that even as you might be looking at a 75 basis rate hike in the month of November, December could be 50 basis points, and that clearly has been supportive.
All right, Manisha, thanks a lot for bringing us that quick update from the commodity space. With that, we have to wind down on this edition of Power Breakfast. The Asian markets are all higher, with Hang Seng leading the gains this morning. The adjusted SGX Nifty rate also indicates a positive start for the Indian market. So let's see how we go from there. But thanks a lot for tuning into Power Breakfast. Bazaar Morning Call is up next.